Hey guys, it is Julie here with JT Wealth. It is Friday and it is not even noon, and I've already poured myself a glass of wine, as today we are going to try to bring you up to speed on what has occurred in the stock market this week and where we are leaving things at today on Friday. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, it has been an insane week in the stock market so far, as we have seen Reddit retail investors take on the hedge funds of Wall Street. So we have a lot to cover today, as we're going to take a look at what exactly happened yesterday, who's being blamed, the lawsuit, plus a statement from the SEC. Now, there are a lot of differing opinions out there, and I'm not looking to take a stance today, but just share with you guys information that I've gathered from multiple sources. And just before we dive in, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Also, don't forget to check out some of the great links we have in our description, which includes some free stocks for Webull if you're looking to sign up and fund a new investing account. Okay, now real quickly, I think most of us by now know that the Reddit retail investors came together with a plan to purchase GameStop stock, among others, to help drive the price up and affect the short sellers on Wall Street. So fast forward to yesterday, when Robinhood and others halted buying of GameStop and other hot stocks, infuriating users. And this was after a wild week of trading. GameStop stock was $65 as of last Friday's close and rocketed to $347 by Wednesday for a 437% gain. Robinhood wrote, "We continuously monitor the markets and make changes when necessary. In light of recent volatility, we are restricting transactions for certain securities to position closing only." This understandably had a lot of Robinhood users quite upset, as when you even went to search for the GameStop stock, it wouldn't even come up. Robinhood also shut down buying of AMC, BlackBerry, Bed Bath & Beyond, Express, COS, Naked Brand Corp, and Nokia, where users could only liquidate or close positions. Now, people were very frustrated, as it seemed that brokers were not only trying to stop these stock prices from rising any further, but were also forcing the prices to decrease, as panicked investors only had the option to sell their stock. Hearing from Barstool Sports' Dave Portnoy, he said either Robinhood app allows free trading like they say they do, or they die. It's really that simple. Now, of course, Robinhood was not the only broker that restricted trading on these hot stocks, as Interactive Brokers also put restrictions in place, and in addition said that long stock positions will require 100% margin and short stock positions will require 300% margin until further notice. Now, this next part is where we definitely have some more differing opinions and theories, and that is the reasoning of why these brokers were restricting these trades. And Robinhood offered up somewhat of a boring reason for this. Robinhood took to its own blog and their CEO's Twitter account to explain why it had halted trading of some of those stocks earlier. Now, there was speculation that Robinhood was limiting the trading ability of those users at the behest of, pick your poison, Citadel, the US government, hedge funds, Janet Yellen, or others ran rampant. But none of it was true, at least according to Robinhood's telling. Robinhood stated that amid this week's extraordinary circumstances in the market, we made a tough decision today to temporarily limit buying for certain securities. As a brokerage firm, we have many financial requirements, including SEC net capital obligations and clearinghouse deposits. Some of these requirements fluctuate based on volatility in the markets and can be substantial in the current environment. These requirements exist to protect investors and the markets, and we take our responsibilities to comply with them seriously, including through the measures we've taken today. So basically, they are saying that they were running low on capital and had to make some tough decisions because of that, and had to shut off those trades to make sure that they stayed on the right side of those capital needs. As I said, though, there are definitely some differing theories out there on whether that is the whole story or not. Now, this topic is not expected to die down at all in these coming weeks, as we're seeing members of Congress get involved and promises of hearings in the future. Senator Sherrod Brown, the incoming chair of the Senate Banking Committee, said in a statement, "People on Wall Street only care about the rules when they're the ones getting hurt. It's time for the SEC and Congress to make the economy work for everyone, not just Wall Street. That's why, as incoming chair of the Senate Banking and Housing Committee, I plan to hold a hearing to do that important work." Now, in further news this morning, we've heard that Robinhood has raised $1 billion after trading halts to keep its platform running. Now, Robinhood told TechCrunch that those funds were raised from its existing investor base, and the New York Times reports that the company raised the new equity capital after tapping its credit lines for $500 to $600 million, although the company did not answer a question from TechCrunch regarding the credit lines. The reported drawdown matches reporting from yesterday, indicating that Robinhood had accessed 9 figures of capital to ensure it had enough funds on hand to meet regulatory minimums and other requirements relative to its users' trading activity. With this new capital raise, Robinhood told investors that today, on Friday, they would return some fashion of trading back to those stocks that they previously restricted. But that move might be a little too late for Robinhood, as they've already been hit with a class action lawsuit. That class action lawsuit was filed in New York Thursday, alleging that Robinhood deprived their customers of the ability to use their service in an effort to manipulate the market for the benefit of people and financial institutions. As I said before, Robinhood was not the only broker that restricted trading on GameStop and other stocks. Interactive brokers Webull and TD Ameritrade or some that also imposed similar restrictions. But Robinhood has drawn the most ear, likely due to its popularity among the Reddit day traders who fueled this unprecedented rise of GameStop to begin with. Now, amongst all of this, we have now also heard from the SEC, who issued a statement on the past week's turbulent market activity prompted by the Reddit-fueled GameStop run. It is a relatively brief statement and doesn't mention any of the key players by name, but it does acknowledge that extreme stock price volatility has the potential to expose investors to rapid and severe losses, which could undermine market confidence, and basically says the commission is watching closely to ensure that it doesn't. The SEC statement does specify that it believes the core market infrastructure remains intact despite the heavy trading volumes of the past week. The SEC statement includes a call-out that seems specifically directed at entities like Robinhood, and it's fair to interpret it as a warning. It says, "In addition, we will act to protect retail investors when the facts demonstrate abusive or manipulative trading activity that is prohibited by the federal securities law. Market participants should be careful to avoid such activity. Likewise, issuers must ensure compliance with the federal securities law for any contemplated offers or sales of their own securities." Now, this statement, of course, can be found directly on the SEC's website and is shown here, and I'm not going to read through it word by word, but I will definitely have the link to it down below in the description. So all of this chaos in the stock market this week really brings to light the question, how free exactly is the market? And that question is being asked by Jamie Rogozinski, the founder of Wall Street's Bets and the forum on Reddit at the center of this GameStop saga. He asks, why are the brokers taking actions? What are the forces behind it? Obviously, they're pressured under it. It doesn't make sense for Robinhood to do something like that given their target demographic. He adds that those people are effectively now controlling the price of the market as well, and that the SEC should try to stabilize the situation. He says, "I do believe that they have a responsibility to do something about it. The thing that I question is whether they have the tools to do it both, either regulatory, as far as rules are established, and or the resources. The fact that they're having brokers step in, it says volumes to me as opposed to the SEC." So obviously there is a lot to unravel there, and we just skimmed the surface of some of the highlights of what's occurred in these last couple days, and there is still a lot left to be seen on how this will move forward in the future. One thing that is for sure is that there is a lot of mistrust in the stock market right now. I'm just hopeful that through all of this, we're able to find some resolution that holds some of these brokerages and bigger hedge funds accountable and creates some more transparency and fairness across the market. Now, of course, you guys know I always love hearing from you and would be really interested to hear your opinion on all of this. Have you been holding the line with some of these stocks? Have you just been watching from the sidelines? And what do you think the results of all of this chaos are going to be on the market in the future? I, for one, am definitely looking forward to the weekend. Hopefully we get a little bit of quiet from all of this noise. Thank you guys so much for watching. If you made it all the way to the end, hit that thumbs up button. Make sure you're subscribed. I hope you guys have a wonderful weekend, and cheers.